Welcome to episode 4 in my series on life insurance, the needs, and how to go about solving your problems in the world of life insurance. We've touched on various episodes on the reasons why people need life insurance. We touched on episode 2 on the difference between term and permanent life insurance. Episode 3, we got a little bit hairy into pension maximization for people with pensions. Today in episode 4, we're going to talk about how life insurance ties in with estate planning. But before I get started, like, share, and subscribe because I need all you out there to keep following the show and pick up our future episodes because there's more nuggets out there that I'm going to be bringing to you. So let's talk about estate planning and where life insurance comes into play. I was just talking to somebody the other day that they had this money, let's say they had $1 million, and they kept saying, I don't want to spend my $1 million, I want to make sure my kids get that money. And I said, well, you can have your cake and eat it too. And they said, well, what do you mean? I said, well, you could leverage your $1 million and buy life insurance, put it in a trust, and create an asset for your kids using the life insurance when you pass away. As long as you budget your $1 million and cover those premiums, why can't you do both? Why can't you spend your money and at the same time fund life insurance trusts to create tax-free income for your heirs? So that's one of the many ways that life insurance can be used in the estate planning field. What life insurance does ultimately in the world of estate planning is it creates liquidity. Now, I'm not an attorney. You're going to need to talk with an estate planning attorney. There's going to be trust planning involved, and I could talk at high levels around it, but that's not what we're going to be getting into today. I'm going to talk about how the life insurance ties in to help create that liquidity. Estate planning is when you and your spouse have finally passed on and your affairs have to get sorted out. And in the United States of America, there's still an estate tax. So when you die, if you have over a certain amount of money, the government still wants their pound of flesh. So no matter how many taxes you paid over the years, based on the size of your estate and the tax codes, you still may owe money giving away at death before your kids get a penny. And so part of the estate planning techniques, why you want to use attorneys, why you want to have trusts, why you want to talk to financial advisors out there, is to make sure you minimize your taxation as much as possible. And you can do that properly using trusts and these techniques. Think about a couple different scenarios. In the world of estate planning and high net worth, a lot of these people have investments or vehicles that are very illiquid. If you're into real estate and you own multitudes of properties and are worth tens and hundreds of millions of dollars, and you want those properties, the Hiltons, the Rockefellers, whoever they were, they had to pass their assets and their businesses down to the next generations. But at those valuations, there's massive amounts of taxes that are due. They need to create liquidity. You don't want to have to sell the buildings and the properties to raise capital to pay taxes and now diminish the size of the portfolio. Conversely, what if it's a bad time to sell real estate? Now you're stuck having fire sales and losing millions and millions of dollars on potential transactions. So one of the ways around this is you create life insurance trusts to recreate an asset outside of the estate, tax-free to you, that's going to help pay and alleviate that tax bite. That's a big reason why life insurance is so heavily tied to estate planning. Now, some of you out there may be familiar with the terminology of premium financing. Again, not going to get deep in the weeds here, but premium financing is a high-level technique where you actually have other people lending you the money to pay the premiums, i.e. premium financing, where you're just responsible for the interest on the loan instead of the actual premium due for the life insurance. And there's calculations in there and there's capital that might have to be pledged. But if you think about it, people with wealth want to keep their money working. They don't want to have their money going $1 million, $2 million, $5 million a year paying premiums when they could keep their working capital in their businesses. So leveraging that using premium financing and only having to pay the interest on the loan and letting the plan work itself out, eventually pay off the loan, and then own all that life insurance free and clear, these are some pretty cool techniques out there. You want to consult me and other specialists out there to help you figure that out for yourselves. So premium financing, a very high level technique around estate planning. But again, you don't have to be a multi-millionaire to need a will, to need trusts, to use life insurance. Even that lady with $1 million can leverage her estate using life insurance with proper trusts to create more tax-free income and tax-free assets for her heirs. This has been episode number 4 on estate planning and how life insurance ties in. Again, I'm just scratching the surface. There's so much in here to share with you. Make sure you like, share, and subscribe. Come see our next episode as we pick up the conversation. Hit us up at asktheplanman.com. I want to hear your questions. Let me know what else we can do for you. I'm your host, Bruce Weinstein. Thanks for joining me today.